Well, topic 7, past adjustments. That is, sometimes after closing the financial statement or after closing the final accounts, that is after preparing your financial statement, that is your trading and your profit and loss account, some errors or omissions in the accounts of the earlier years are noticed. Okay, some errors or omissions in the accounts of the earlier years are noticed. So these errors or omissions are rectified by passing and adjusting entry. Okay, by passing and adjusting, or you can say by adjusting the capital account of the partners, by passing an adjustment entry or entries. So what did I say? After closing the financial statement, it so happens that there is some error or omission in your earlier financial statement. So this error or omission is basically rectified by adjusting the capital account by passing and adjusting entry or entries. So let's see as to what are the questions that has been asked in case of your past adjustments or rectifying entries. Well, Mohan, Suhan and Adit, they were 3 partners in a firm sharing profits and losses in the ratio of 3:2:1. Their fixed capital, always keep in your mind, when you see the word fixed capital, immediately it should strike to you that all the transactions will be treated to current account. Clear? Their fixed capitals were 2 lakh, 1 lakh and 1 lakh respectively. For the year ended 31st March 2023, the interest on capital was credited to their capital account at 8% per annum instead of 5%. Read the question carefully. It says that for the year ended 31st March 2023, interest on capital was credited to their accounts at 8% per annum instead of 5%, which means that interest on capital should have been provided at 5%, but you provided 8%. So 3% is given more to them. So that 3% you have to take it back, right? So in this case, they're asking you is pass necessary adjusting journal entry and show your working clearly. So when they ask you show your workings clearly, you have to make your statement of adjustment, where the statement of adjustment is basically a summary of your partner's capital account. Clear? So now that 3% which is there, you have to take it back. In your partner's capital account, usually interest on capital is credited. But if you have to take it back, you have to debit it. So you make your statement of adjustment where you will have the particulars column, Mohan, Suhan and Adit, they are the partners and the firm, and you will have a debit credit column for each of the partner as well as the firm. Okay, so now IOC now cancelled. That is the 3%. So what is the 3% of 2 lakh for Mohan, Suhan and Adit? So 3% of 2 lakh is 6,000, 3,000 and 3,000. So when you are cancelling, when you are providing, partner's capital is credited. When you are cancelling or taking back the IOC 3%, you will debit. So you will debit 6,000 for Mohan, 3,000 for Suhan and 3,000 for Adit. So when the partners are debited, the firm will be credited with 12,000. So this is your profit. This profit will be distributed in the ratio of 3:2:1. So which is 12,000 divided in 3:2:1. So this is 6,000. This is 4,000. And this is 2,000. So basically you close the firm credit, write the balancing figure on the debit, and the partners will be credited in 6:2:1 ratio. When it comes to Mohan, both debit and credit is equal. There is no balance at all. When it comes to Suhan, the credit side is heavier by 1,000. So write down over there 1,000 and credit. And when it comes to Adit, debit is greater by 1,000. So write down debit. So the journal entry that you're going to pass 2023, 31st March. You're going to pass the entry is Adit's current account debit to Suhan's current account being adjusting entry passed. That is 1,000 and 1,000. So basically in this question, interest on capital was credited more. You had to credit 5%, but you credited 8%, 3% more you credited. So you are taking it back, right? Usually interest on capital is credited in the partner's capital account, but when you have to take it back, you'll have to debit. So you debited, you took that 12,000, you calculated interest on capital as 6,000, 3,000 and 3,000 and you debited the partners and it's a profit because you are taking back. So that is distributed in the 3:2:1 ratio and then found out what is the difference amount. And the journal entry, since the word fixed capital is given, you have used the word current account. So the journal entry is Adit's current account debit to Suhan's current account. Well, the next question. Manoj and Nitin were partners sharing profits in the ratio 2:1. On 31st March 2023, the balances in their capital account after making the adjustments for profits and drawings were 90,000 and 80,000 respectively on 31st March. 31st March means closing capital. So the closing capital of Manoj and Nitin is 90,000 and 80,000. The net profit for the year ended amounted to rupees 30,000. During the year, Manoj withdrew 40,000 and Nitin withdrew 20,000. Subsequently, it was noticed that interest on capital at 10% per annum was not provided. So the question says that interest on capital is not provided. Okay, and you have closed your financial statement. And also, interest on drawings to partner rupees 3,000 to Manoj and 2,000 to Nitin was not charged. Pass the necessary adjusting journal entry. While teaching you interest on capital, I made the first point very clear to you that interest on capital is always calculated on the opening capital and the additional capital. In the question, they have given you the closing capital. And the last condition, which was if the closing capital is given, you have to find is the opening capital. So now let's find the opening capital for both the partners. Working note, calculation of opening capital. The two partners that you have is Manoj and Nitin, and the closing capital is Manoj and Nitin. The closing capital that you have is 90,000 and 80,000. Add the drawings. The drawings of during the year Manoj withdrew 40,000 and Nitin withdrew 20,000. So this is 40,000 and this is 20,000 and less the profit. Profit is 90,000. Profit is 30,000 in 2:1 ratio. So that's 20,000 and this is 10,000. So what will be your opening capital, children? Closing capital plus the drawings minus your profit. So your opening capital is 90 plus 40. 1,30,000 minus 20,000 is 1,10,000. And here you have is 80 plus 20 is 1 lakh. 1 lakh minus 10,000 is 90,000. What's your IOC? IOC is interest on capital is 10% per annum. IOC is 10%. So that is 11,000. And this is 9,000. And your interest on drawings already given us. So we have already found out your interest on capital is 11 and 9,000. And interest on capital was not provided. And interest on drawings is not charged. So basically, since it is not provided, now you have to provide. You have to give it to the partners. So partners account, capital account will be credited. So IOC. IOC now provided. That is credit the partners with 11,000 for Manoj and 9,000 for Nitin. So when the partners are credited, the firm will be debited with 20,000. IOD now charged. So when you are charging, you're putting in the partner's capital debit. So how much is the interest on drawings? Manoj is 3,000 and Nitin is 2,000. So when the partners are debited, the firm is credited with 5,000. Now close your firm. It's 20,000. Balancing figure is 15,000. 15,000. Distribute. In which ratio? 2:1 ratio. So 3, 5, 5 is a 10. So when the firm is debited, when the firm is credited, the partners will be debited. And now, which side is heavier? In case of Manoj, the debit is 13,000 and the credit is 11,000. So basically 2,000 more. So this is 2,000 debit. And when it comes to Nitin, the credit is more. So 2,000 credit. So your journal entry, since nothing is mentioned whether it is fixed or fluctuating, you are assuming that they are maintaining fluctuating capital method. So the journal entry will be Manoj's capital account debit 2023 31st March. Manoj's capital account debit to Nitin's capital account, being adjusting entry past 2,000 and 2,000. So in this particular question, both one thing, there are so many concepts over here. First and foremost, closing capital was given. So you had to find the opening capital with the help of your formula. So what was your formula? Closing capital plus the drawings minus the profit you get is your opening capital. Clear? So you calculated the opening capital. And then thereafter they are saying in the question that interest on capital is not provided, interest on capital is not charged. So if it is not provided, now you provide it by crediting the partners. And interest on drawing is not charged, so now you charge it by debiting the partners. And then whatever remaining profit which you have is 15,000 divided in the ratio 2:1. And then do the balancing, see which side is heavier. In case of Manoj, the debit is heavier because it's 10,000 plus 3,000, that is 13,000. And Manoj credit is only 11, so 2,000 debit. And in case of Nitin, credit side is greater 9,000 and debit is only 7,000, so 2,000 credit. So the journal entry is Manoj's capital to Nitin's capital account 2,000. Well, on 31st March 2023, again 31st March 2023, March 2023, the capital of Raghav and Diya stood at rupees 4 lakh and 3 lakh respectively. After the necessary adjustments in respect of drawings and net profit. So after making the adjustment of drawings and net profit, their capital was 4 lakh and 3 lakh. That means that's their closing capital. Subsequently, it was discovered that interest on capital at 10% had been omitted. Net profit for the year ended amounted to rupees 1 lakh. During the year ended 31st March 2023, Raghav's drawing were rupees 2,000 drawn at the beginning of each month, while Divya's drawings were 3,000 drawn at the beginning of each quarter. Pass the necessary adjustment entry. First and foremost, in this particular question, you have is the closing capital, so you have to find is the opening capital. So we will first find the opening capital. So write on working note. Calculation of opening capital. The two partners that you have is Raghav and Diya. The closing capital after as necessary adjustments stood at 4 lakh and 3 lakh. And they are saying that the net profit, Raghav's drawings were 2,000 drawn at the beginning of each month, right? So each month it is 2,000. So drawings of Raghav's drawings were 2,000 drawn at the beginning of each month, so it is 24,000. And in case of Divya, it is 3,000 drawn at the beginning of each quarter, so it is 12,000. So this is 3,000 into 4, and this is 2,000 into 12. Minus the profit. The profit is 1 lakh. Nothing is mentioned, so the ratio is equal. So that's 50,000 and 50,000. So your opening capital $40 plus 24, 64 minus 50,000. 4 lakh 24 minus 3,74,000, and there is 3,12,000. 2,62,000. Your IOC is 10% per annum has been omitted. Interest on capital at 10%. So 10% is 37,400 and 26,200. Make your statement of adjustment, Raghav, and write on IOC. IOC now provided. So it's 37,400 and 26,200. Why are we crediting, children? We are crediting because in the question it says that interest on capital at 10% per annum had been omitted. So we are crediting the partners. We are giving them. So the firm will be debited. Ratio, nothing, 1:1. When the firm is credited, the partners will be debited. Now which side is heavier? So 63,600 and 63,600. So 37,400 minus 31,800 . 5,600 credit and 31,800 minus 26,200, 5,600 debit. So your journal entry is Diya's capital account debit to Raghav's capital account. The word fixed is not given, so it's fluctuating. So 2023, 31st March, you have is Diya's capital account debit to Raghav's capital account, being adjusting entry past. So that's 5,600 debit and 5,600 credit. Well, the next question. Anvi, Vanvi and Karan were partners in a firm sharing profits in the ratio 2:2:1. Their fixed capitals were 4 lakh, 5 lakh and 6 lakh respectively. For the year ended 31st March 2023, interest on capital was credited to the partner's capital account at 6% per annum instead of 10%, which means that you have credited only 6%, you have given only 6%, but you had to give 10%. So you have given 4% less, right? So if 4% less, that is interest on capital was credited to the partner's capital account at 6% per annum instead of 10%. That means you had to give 10, but you gave only 6. So 4 is less, right? So you have to calculate that 4% you have to give the partners, and 4% of, so IOC now, make your statement of adjustment. IOC now provided 4%. So 4% of 4 lakh is 16,000. 4% of 5 lakh is 20,000. And 4% is 24,000. $60,000 debit. So 60,000 you credit and close the account. Two is to 1 ratio. 12,000 into 2, 24,000, 24,000 and 12,000. Find out which is heavier. This is 24 and 6. So 8,000 debit. When it comes to Riddhi, again the debit is heavier by 4,000. So that is debit. And when it comes to Sham, the credit is heavier by 12,000. So 12,000 credit. So the journal entry will be 31st March. Anand, it's the word fixed is given. So when the word fixed is given, immediately it should strike to you that you are going to make use of your current account. So the journal entry will be Anand's current account debit, Riddhi's current account debit to Sham's current account. That is 8,000, 4,000 and 12,000. being adjusting entry passed. Well, the last topic of this particular chapter, that is guarantee of profit. A partner or partners may be guaranteed a minimum profit from the business. The profit may be guaranteed to an existing partner, or it might be guaranteed to an incoming partner, okay? And it might be guaranteed to the existing or the incoming partner by all the remaining partners, or one or more of the existing partners, or the firm. Are you clear? And so basically you need to remember that in guarantee of profit, the firm or the partners are giving a guarantee either to the existing partner or to a new partner, and this guarantee is given either by all the remaining partners, or one or more of the partners, or by the firm. Now, a very, very important point to put in your head: when the guaranteed partner's share of profit is more than the guaranteed amount, his actual share of profit is given to him as the guaranteed amount of profit. That means if his actual share of profit is greater than the guaranteed amount, in that case his actual share will be given to him, okay? Now this can be given either in the old ratio, or in a particular ratio, in an agreed ratio. If nothing is mentioned, it will be equal. So now let's see as to what are the different questions that has been asked from this particular topic. Well, Abhay, Boris and Chetan were partners in a firm sharing profits 532. Boris was guaranteed, this fellow is guaranteed a profit of 95,000. Any deficiency on account of this was to be borne by Abhay and Chetan. How? Equally. It's very clearly given who is going to bear the guarantee and how they are going to bear the guarantee. So who is bearing the guarantee is Abhay and Chetan, and how? Equally. The firm earned a profit of 2 lakh for the year ended 31st March 2023, and the amount given. Now the question says, what is the amount given by Abhay to Boris as a guaranteed amount? The first thing that you need to do is, you have to check in your question what is the profit. The profit in your question is rupees 2 lakh. Okay, divide this in the ratio of 5:3:2. So in that case, Abhay, Boris and Chetan. So Abhay will get rupees 1 lakh. This is 60,000 Boris, and this is 40,000. What is the guaranteed amount, children? The guaranteed amount, the guaranteed profit is rupees 95,000. To whom? To Boris. Right? But Boris got how much? 60,000. So what is the deficiency? Deficiency is 95,000 minus 60,000, which is equal to rupees 35,000. This is the deficiency that the partners Abhay and Chetan has to bear. How? Equally. So this will be borne equally. Right? 1:1 ratio. So this is going to be 17,500 and 17,500. And now the question is asked is, the amount given by Abhay. What is the amount given by Abhay to Boris as a guaranteed amount? So what will be the amount, children? The amount will be 17,500. Option A is your correct answer. Well, the next one, Raju, Sohan and Tina are partners in a firm sharing profits and losses 2:2:1. Tina is guaranteed a minimum amount of 40,000 as share of profit of every year. Any deficiency arising on that account shall be borne by Raju. In the earlier question, it was the existing partners, both the partners equally. Now they are saying any deficiency is to be borne by whom? Raju. If the profit for the year ended is 1,60,000, so your profit is rupees 1,60,000. Clear? Divide that in the ratio 2:2:1. So in that case for Raju is rupees 64,000. For Sohan it is rupees 64,000. And for Tina it is rupees 32,000. Clear? What is the profit? What is the guaranteed amount, children? The guaranteed profit is rupees 40,000. Whereas Tina is getting how much? Only 32,000. What is the guaranteed profit? 40,000. Whereas Tina's profit is only 32. So what is your deficiency over here? Your deficiency is 40,000 minus 32,000, which is equal to rupees 8,000. And who is going to bear it? It is borne by Raju. So Raju will bear a deficiency of what amount? Of rupees 8,000. Your option A is your correct answer. Well, this is again a 3-mark question, children. Chaman, Barman and Aman were partners in a firm sharing profits in the ratio 3:2:1. Aman was guaranteed a minimum amount of rupees 60,000 as a share of profit every year. The net profit for the year ended 31st March 2023 amounted to rupees 1,20,000. Pass the necessary journal entries in the books of the firm showing the distribution of profit among the partners. It's a 3-mark question. Definitely they expect a 3-mark journal entry as well. So the first journal entry will be transferring of the profit. So it is profit and loss account debit to profit and loss appropriation account. Being profit transferred from profit and loss account. So what is the amount of profit? 1,20,000. After this, distribute your profit between the partners. So the journal entry will be profit and loss appropriation account debit to Chaman's capital account to Barman's capital account to Aman's capital account. Being profit distributed. In 3:2:1. So 1,20,000 you distribute in the ratio of 3:2:1. So it will be 60,000, 40,000 and 20,000. Now read the question. Aman was guaranteed a minimum of. How much is Aman guaranteed? Aman was guaranteed a minimum of 60, right? So minimum guarantee is is rupees 60. Whereas Aman's share is rupees 20,000. So deficiency is rupees 40,000. Now in the question, it is not mentioned as to who is going to bear the deficiency. When nothing is mentioned, the existing partners will share in their ratio. So existing partner is who? Chaman and Burman, right? What will be the ratio of Chaman and Burman? 3:2. So in 3:2 ratio. To 24,000 and 16,000. So your last journal entry will be Chaman's capital account debit. Capital account debit. Burman's capital account debit. To Aman's capital account. So this is 24,000, 16,000 and 40,000. So 3 entries. One is for transferring the profit from the profit and loss account to profit and loss appropriation. So profit and loss account to profit and loss appropriation account. The second entry for distributing the profit. So it's profit and loss appropriation to Chaman, to Burman, to Aman in the old ratio, that is in the 3:2:1 ratio. And then after that, find out what is the minimum guarantee. Minimum guarantee is 60,000. Aman's profit is only 20. Deficiency is 40. 40 is distributed between the existing partners in the ratio of 3:2, that is 24 and 16. So basically, Chaman and Burman will be debited because they are the ones who are giving, right? And Aman will be credited because he is the one who is getting. Clear? So this is the journal entry 3-mark question. And the last question, Mahi, Rui and Guinea are partners in a firm sharing profits and losses in the ratio of 6:4:1. Mahi guaranteed a profit of 50,000 to Guinea. Net profit was rupees 1,10,000 and Mahi's share in the profit of the firm after giving the guaranteed amount to Guinea will be. Clear? So Mahi guaranteed. Who is guaranteeing? Mahi guaranteed a profit of 50,000 to Guinea. Well, the net profit was 1,10,000. So profit is 1,10,000. So how much will Mahi get? Mahi, Rui and Guinea. So this is distributed in the ratio 6:4:1. So it is rupees 60,000, rupees 40,000 and rupees 10,000. The guaranteed profit is rupees 50,000. And who is giving the guarantee? Mahi is giving the guarantee to Guinea, right? So guaranteed profit is 50,000, but Guinea's profit is how much? Is rupees 10,000. So the deficiency amount is 50,000 minus the 10,000, which is equal to rupees 40,000. Well, they're asking Mahi's share on the profit of the firm after giving guaranteed amount to Guinea will be what? What is Mahi's profit, children? 60,000. After giving this 40,000, what will be the share? Mahi's share will be how much? Is equal to this 60,000 which he had. Out of that, 40,000 has been given. So, rupees 20,000. So, your correct option is option A, rupees 20,000. So, these were the questions that was asked in March 24, 2024 board examination. In fact, they have covered all the topics, important topics in this particular year. So, that's it for today and have a good day. Thank you so much.